Good morning, everyone. This is Brad Matheny, and this is kind of a play chart. Now, let me explain to you what's going on. This is really kind of a carryover to my exploring the 369 structures in the sense that what I'm trying to do here, guys, is the markets have rallied all the way up into this area, and I was trying to time this market trend based on Fibonacci and Gann and potentially Tesla as well. But right now it's mostly Fibonacci and Gann. And I noticed that we'd come kind of right off of this level. I'll make this a little darker here. But the whole idea here is that off of this deep low on October 27th, 2023, we had this rally. And I started mapping out this rally to see if this channel, and remember, drawing channels, draw what you see, is what I tell people. Some people laugh at my charts, but I draw what I see on the chart. And remember, I've been doing this for a while and really want to try to get this through everyone's head. The idea is what works for you works for you. Doesn't work for someone else, doesn't matter. You're not trading their money and you don't have to get their approval. It's just a matter of you do what works for you. But knowing Fibonacci, I was trying to find out if we had reached some sort of a contagion level in this area. So ideally, what I did is I mapped out what I call the impulse move, the first real big substantial move up into this area. And then I drew boxes from the lower level up to 382, from the lower level up to 50, and from the lower level up to 618. Now, I could have done it from the other direction, but the reality is I wanted to be unified. So then what I did is we map out the impulse move after a pullback, after a big broad pullback. So we're really looking at this move here into the pullback, and then I'm mapping out that first impulse move, which is from basically here up to here as the impulse move. And from there, I am then mapping the ranges and drawing these kind of center lines off the pullback from the impulse move. And what I'm trying to do is I'm trying to measure whether these secondary and third legs play out in conjunction with some sort of a Fibonacci mapping. Now, I can tell you that from the looks of my work here, if you take a look at where this high comes, this is the essentially 618 level, and you can see it comes in almost perfectly right to this area, indicating there's our leg move. And I'm trying to find out if we get consistent. This would roughly be a 0.618 expansion of this initial move. Then we get a pullback. Then we get a rally from this pullback level and come over here. What I'm really looking for is this rejection area. So, what I would call rejection would be right in that area. I'm using these lows right over here. And then look, we see that that's about where it died. That's about where that trend ended, right at that rejection point. Now we come over here, we look for the same rejection point right over here. And again, that's about where this trend died. I could move it a little lower here, but I just want you to see. Now, then I kind of took a look and said, well, this is odd because this looks like a 1.618 retracement, and I did this wrong. This is a 1.618 move. So this is a full 161% move compared to this range right here. So essentially from here up to here is 161%. It maps out to this level here off of this high. And I would almost, I don't know, I want to say guarantee, but I believe that we're running into a topping pattern right here based on this analysis. Post Trump election, we needed to get above it. We are above this level. We've seen this rally. We're below this channel. It looks to me like we're going to probably top and pull back off of this down here into this lower level. But in order for me to see that, I needed confirmation. So I went back to the COVID low. I didn't do this one. I could do this one later, but I went to the COVID low. Oop, let me get rid of that and drag this over here. And now, coming off the COVID low, we have the same levels. I drew it off of this, what I call rejection point here, up to this rejection point here. I mapped out the same levels. So interestingly enough, we get that same 618 expansion right up into this area. So you can see it comes very, very close. Then we break into a new high, pull back. We get that same 5-0 level, which is this level, carrying out to here. We then get that same 5-0 level right here, carrying out. And that coordinates with a full, and this would be a 1.618, 618 plus 618, so 1.382 roughly expansion to the upside before we reach this peak. So I'm trying to show you blocks as they're appearing. It looks to me like the markets move in these types of blocks after expanding upward. We measure essentially the block from this initial block. So it seems very evident that we are looking at this 618 block after this impulse move. So remember, we've got, come back over here, we've got two examples where the initial rally after the bottom has qualified with this block. So I'll try to draw the arrow here indicating this is our initial rally block. Okay. And this is our initial rally block right here. We get the pullback off of the impulse move and we rally basically 618 of that impulse move. Then from there, looks like we get into these double types of 5-0 levels. 382 levels. These are 382 levels in purple. And those bring us right up close to this upper level as a top. You see how it's played out twice over here. So now we go back a little further. I want to validate this data. So here we have this scenario where we do get the 382 move. Again, depending on where I draw this, here's the impulse move before we get our first pullback. We do get the 382 or the 618 rally up to this level. We get our little impulse move here. Then we move into a secondary mode. Okay, now this was back in 2019, and you can see we get now two of these modes up to the top. And again, I'm using this as a rough area for rejection, trying to show you how the markets appear to move in these building blocks, which are based on Fibonacci. So we get a variant here. What is the correlation to the variant? Well, I don't know yet. Okay, what I do know is if I come in here and I draw my time cycle, what I'm trying to do with the time cycle is mark the bottom up to the top. Wrong one. Come into here. Where is it? Fib time zone. From here to the peak. Now I'll just go to this level because I believe that's where I marked it. And now I've marked these other areas. And what this is essentially the peak through the pullback where we should break the pullback. The secondary peak into a pullback where the pullback could likely end. Then we roll into these cycle patterns, and you can see in this particular case, because we've rolled past all of this extension, it looks like what we're getting back over here, this is the last level that I've marked. I mean, there is one out there that's further, that's an 8, and should be drawing right here, I think. But again, it looks like we've gone past my 4.5 or 4.25% extension off of this low. So this might be considered a broad-based pullback, setting up another channel, meaning these may not correlate efficiently to these systems. And what we would be looking for then is a new pullback. And the way we would do that is we would come in with a Fibonacci level like this, rallying up to this level, come back in here, grab these, copy them. By the way, you can do that with control. Come back over here. Now I need to measure them efficiently. So let's leave this here for now. This will be our 5-0 range. This will be our 382, and this will be our 618. So now we would be measuring a 382 from here up into this area. And then we would be looking potentially for 2 of these blocks to measure here and to measure here, reaching a peak. And at this particular point, it looks like there is some validity depending on where I measure these rejection areas, but we got a little bit above it. So depending on where I measure these rejection areas, you can see that we came close to a peak here, definitely hit a peak here, and then blew past the peak here. So I would have to say that, we pull up. So maybe we need to be more up in. But I'm trying again to map these. So now, does this correlative function map out to this correlative function? That asks us the new question. And if so, are we running off of this 618 correlative function moving forward? Well, let's find out. So let's come back over here, come back to this correlative 618 function, and let's take a look at how we placed it. So we placed it off of the so the low off of the initial pullback. So we would have to come back over here and say, does this correlate to the initial pullback, or does this correlate to the initial pullback? Well, interestingly enough, that one does. And interestingly enough, this one kind of correlates up into this channel. So now what we're looking at here is, are we getting these correlative blocks, this block channeling through the initial pullback, reaching essentially the height of these 2 intermediate blocks? So in this case, did this block reach the height of these 2 blocks? No. So it actually got higher. So maybe we are doubling this pink block, or this red block. And in this case, you can see here, we reached this level. I'm trying to measure it out here. And do we get the correlation? No. So maybe we are using a larger block, this potential block here, moving up into a doubling. And this breaks down into, how I do my analysis. But if you understand what I was talking about, we were talking about the Rodin math vortex, and the fact that the Rodin vortex cycle versus binary polarity. So what we're looking at in this matter, and here's the Rodin vortex circle, shown this to you before, shown you this as well. This is a pretty good example of the actual cycles itself. And you have this 6 and 3 structure in here. Okay. This is critical because you need to understand that there is that 9 to 9630 vortex right in this area. Okay. So you need to understand that when we're looking at this, what we're really looking at, okay, is a cycle structure that essentially runs across this area here. 1, 2, 4, 8, 7, 5. 1, 2, 4, 8, 7, 5. But at the same point in time, we have this vertical polarity. We have a left and a right sphere. Okay. And that is the polarity that I'm talking about. So when we come into this and we start looking at these polarity shifts, this is where this expansion phase after COVID more than likely has some logic related to this initial block. So remember, we're looking at this initial block to see if we carry over into the original trend. This little guy here was the block from back here. And this big one was the block from this range, this pullback range. So we apply the same thing here. We have this is our, make sure we have the right one. Is there one in here? It's kind of dark, so there's probably one in here. Yeah, there is. So this is the pullback range from this previous arc back here. That's this one. And what we're looking at here is, do these correlate? So you see how we get this top and we originate the next block here kind of in the middle. Probably very important to understand that this rolling type pattern indicates that this previous block is no longer essentially required. Okay, it is not of correlative value when we get